Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, the start of a new week on Monday, we saw plenty of action in the grain and livestock trade. We saw beans and meal take a hit, with corn and wheat especially finding some support. Here to walk us through what he sees in the market trade as we start the new week off, John Heinberg, Total Farm Marketing, is with us today. John, good to catch up with you. Hope you had a good weekend and an interesting, fun way to come back to the markets, I guess, on a Monday, as we saw just a tale of two different complexes. Soybeans and bean meal under heavy pressure, yet wheat was higher, old corn higher. Really just felt like a mixed bag, but not a bad day by any means, at least, not in the soybeans anyway. Soybeans a different story. But overall, felt like a pretty good Monday as we started the week, John.
Yeah, probably a bit of a profit-taking day on both sides. We found out over the weekend or on Friday with the Commitment of Traders report that the funds have pushed a wheat position to the short side, as big as we've seen since back in May of 2019 on that Chicago wheat contract. And they dropped over 70,000 contracts of corn in the last handful of days there before that report got compiled. And so maybe we're seeing a little bit of a bounce on that regard. Really in that corn market with that much of a movement in positions, to still kind of hold prices in the way we have is fairly impressive. At least, again, just tells me that there's still a little bit of support underneath that market. Then you get over in that soybean market today. Obviously, we're watching the weather in Argentina. Maybe a little bit more moisture than anticipated came in. The forecast was still staying mostly on the hot side, mostly on the dry side. But it was probably enough today to make that soybean meal, soybean oil spread kind of blow apart and fall, take some profits off of, as that thing was running aggressively in favor of soybean meal last week with that big week in the meal market, and then the hard sell-off in soybean oil the week before. So all those pieces kind of came together. I think that was what just made beans pause a little bit. Now we'll see if we can find some support. We're still watching what's going on down there with that South American production as well as the demand.
Well, staying on this soy complex a little bit, John, it seemed like to start, traders, a lot of folks were pointing to better rains over the weekend in Argentina, although it's still hot and dry here to start the week. They were pointing to that as a reason to kind of back off on beans, but you kind of alluded to, and I've been hearing as well, and looking at soybeans, just felt very overbought, couldn't bust through that $15 mark, and that just kind of gave buyers a reason to just step out of this soybean market, it felt like, John.
Yeah, very much so. I think there were some other factors that came into play. We'll talk about a little bit in the hog market, but Chinese pork prices had a difficult day, and they were down 8% on the month. Too, that kind of spills over into that soybean market a little bit. Things aren't working well there in their pork industry. Does that reduce the demand for beans? I do think, like you said, it was a bit of a technical move. We couldn't get through that $15 handle, a little bit of a double top on the daily charts. Now we're just going to go back and test the bottom of the range. Now that's another 15, 20 cents down. So we'll see if that kind of holds. Again, we are still watching, the competitive price levels, U.S. beans, South America. Right now, we're still one of the stronger prices out there. And that's why we've seen export business. But that's going to start falling apart here as we start getting closer and closer to that South American crop, or that Brazil crop more than anything, getting itself put together. The other thing, USDA did not make any changes on the Argentina crop production here on the USDA report last week. So that maybe got this market obviously figuring that in. We're anticipating that production number to come down. That should help that soybean meal market out too, as we just saw some panic buying in that market and technical money pouring in, as we just kind of got, parabolic in terms of the buying strength. But again, when you're talking Argentina soybean meal being 41% of the global exportable soybean meal, any weakness there is going to hopefully shift some business to other places. And our supply picture, until proven otherwise, is still extremely tight.
Well, I wonder with soybeans and just demand concerns with China, you brought that up. I'll be interested to see if China steps back in, or should I say when Chinese buyers step back in here this week. What price points are going to take soybeans to maybe correct down to, so to speak, before we see some buying step back in? And, one has to wonder, maybe it's that 1450 level somewhere, 1430. Hard to say, but it feels like we're going to go back down and find some support here before buyers step back in.
Yeah, more likely, and they still got some business, at least from the resources I've noticed or seen, that they got some business to get done here yet for January delivery. And then that bean shift might start coming into play. Our export window is starting to tighten. You can see that by the weekly export inspections numbers. Today, about 1.8 million metric tons for last week's numbers. Again, USDA continues to reach back and revise up the previous weeks. And so we'll see if this number gets revised up next week. But again, it's just in that seasonal downtrend as the export window starts to tighten. So we need to make sure those beans still get out of here. We still get them. They got to get them on a boat, get them moving, get those sales finalized. Otherwise we will still have some concerns on the demand front, especially when those South American beans and those cheaper beans are available. That's when our ports will basically close down, with the exception of non-Chinese buyers. So again, kind of a key window here over the next handful of weeks to get into that mid-1st of January. We need to see those inspections continue to stay strong. Need to see a few more sales kind of kick in, because pretty soon the global focus is going to come to those fresh Brazilian beans.
And I wonder too, I don't think this doesn't feel like a complete washout in soybeans. It feels like, maybe an opportunity for some folks to get a little more protection at a higher level than they've had here in the last couple of weeks. But even then, it doesn't feel like panic mode should be in the soybean complex right now, John.
At least at this time frame. Again, still not a good day today. Everybody waking up and seeing things down 20 plus cents just doesn't give you a warm fuzzy feeling so much for the for the beans that are in the bin that you didn't get sold. But still, you got great prices out there. Even with the weakness today, you still got a heck of a rally off the most recent lows. Probably still needs to be rewarded. Again, we got to watch when we get back down to a couple key moving averages. That 100-day moving average underneath here on the January contract, that's around that 1440 area. That'll be kind of a swing point if we do drop that area. If we cross that, then we got another 20 cents down to the 100-day. So, there's a couple different things we need to watch on the technical side. When we get down to those levels, then we're looking at trend line support in the bottom of this kind of up channel that we've been building. And that's truly, if that breaks, then I start getting pretty anxious about where this bean market might go. We hear there's still a very big premium of U.S. beans to Brazilian beans for that, February, March, April window out there for the export market. And if the demand does dry up, prices will go try to find demand, and that'll definitely bring our prices back down to try to get a little bit more competitive with that Brazilian bean.
Corn and wheat, we alluded to this a little bit earlier. Wheat had a really strong day, helped pull corn higher on Monday. I know we got the news out of Ukraine about the drone strike on the Odessa port, but also feels like corn and wheat's kind of been in a consolidation / breakout type of move for about the last week or so, John. So I wonder if this is a sign that we could maybe finally break out to the upside in wheat, and that could pull corn higher with it.
I'm going to need to see a little bit more follow through on this. I know a couple of weeks ago I was kind of hoping that same turn would happen in the wheat market, and we proceeded to make another leg lower. And again, globally, maybe we get that price to look a little bit more competitive. Last week's low, maybe a bit of a significant low. We'll see. But this consolidation and a downtrending chart still has me a little bit cautious. Today, all we did in terms of that front month, that March contract on the Chicago wheat, went up to the 10-day moving average, which has been resistance over top this since we started rolling over here the 1st of November. So again, to me, we got to get through that area, then truly get maybe some technical buying in. Now, it did feel like some short cover in the day. Weather forecasts are going to bring some precipitation though across the southern plains and through the central plains here. So that's something that could be supportive of this, negative on this market. Then maybe we get some production going. So when you kind of get some negative news, but positive reaction just tells you that it's money flow. Now we'll see if we can get something beyond that over the next handful of days here. Again, today is just Monday. Seeing some shorts walk to the sidelines. Now we need to see some follow through, maybe get some buyers in, because I bet you if we look at open interest, we saw it come down, which is basically meaning some short positions were closing versus new buyers stepping into the market.
I wonder if crude oil had any impact as a supporting factor on the day of crude moving higher. I wonder if that maybe pulled on wheat and corn. I know it probably pulled on bean oil on the day. What are your thoughts there, John?
It's good to see crude oil finally get a little footing, and maybe we got a bit of a natural put into this market. It's been very well documented that the U.S. government wants to start building for the strategic reserves around the 70 handle. We went down and tested that this morning on the WTI crude, and then we saw some prices kind of move. Obviously, we're watching what's going on with the Keystone Pipeline and the repairs that are happening there. How long it's going to take to get that oil flowing. Again, like some of these other charts too, just may have been some technical buying here as this market's gotten itself very, very oversold. So now we'll see if we actually get some lift in that crude oil market. But anytime we get some strength, maybe get some footing there, that's just going to come over and help out. I do think that may have been some of the trigger in the bean oil and soybean meal spread today was that stronger crude market. And that may also have some ramifications over into the ethanol side and what happens with corn.
We're talking with John Heinberg of Total Farm Marketing. He's our guest analyst here today. John, one more thought here. Grains overall, anything changed in your mindset here? I like to ask this question, I think, on a week-by-week basis as we work through the holidays just because of the doldrums and the market moves. Anything in your mind changed or any reminders you want to give to folks on this grain side if they're looking at marketing here before year end?
We still got a lot of good value out there. And again, now we got some money back into that value that maybe we missed out on last week, especially in the corn market. Again, don't fall asleep on it here. Usually, if you want to hold the bushels, you think weather could be an issue, you want to hold your time frame into the summer window, get the puts underneath. We can see how quickly this wants to fall apart. Again, that South American crop will still be an impact. Now, seasonality, typically, we trend a little higher through this window. Maybe we just stay firm into the end of the year. We'll see, if that comes into play. Again, it's just maybe one of those time frames where we just see money start moving to the sidelines and they pushed it pretty heavy to the, off those long positions. Maybe we profit take on those new shorts, and see where this market wants to go. But I would be a little bit of a defender into strength, using put strategies under the bin. Maybe challenging the market, selling some calls over top. You've got the bushels, sell the call against those bushels to challenge the market to go higher. Again, stay on the defensive until proven otherwise, because you've got the bushels to be long in here. And if you do make some sales, you think weather comes into play, then just keep some ownership over top. Maybe not be over aggressive, just have a little bit of paper out there. In case we do get into the spring and weather truly becomes a factor here in the United States, given the tight supply picture. But right now, I would say just the way things are acting, with the trend that we're seeing in terms of the USDA reports, with carryouts getting larger now 2 consecutive months in the corn market, you want to be a little bit more on the protective side or the defensive side, especially if you're holding on to bushels.
Protein sector was fairly mixed on Monday. You mentioned hogs when we were talking soybeans earlier, and the Chinese hog prices under pressure. Hog market U.S. trade was a bit mixed to lower on the session on Monday. Talk a little more about hogs, just what you're seeing globally and what your thoughts are with that hog market to start the week, John.
Well, first off, this week will probably stay pretty choppy, at least the first couple of days. We got December hogs expiring on the 14th, so that'll just kind of keep money moving in and out of that position as we got to get those to the sidelines or let them cash settle, whatever the owners of those contracts want to do. So that just brings a little extra volatility in this week. Now, again, we're still watching the trend that's out there. Hog numbers are still fairly heavy. Last week's export numbers for pork were very dismal in terms of actually net reductions week over week. So we got a little bit of a stockpile, and that's been weighing on the retail pork prices. So we'll have to see if that can start getting cleared up. Hog numbers are coming down. We expect that to happen as we move into 2023. But at the same time frame, this market definitely had a couple of opportunities, a lot of volatility in it. Now, at least February looked like it wants to hold this 83 handle. We went and tested that today, put a nice little turn off those lows. The close and the settle wasn't reflective of the last trade, which was basically flat on the day. So maybe we got a little bit of buying strength and some of the sellers drying up there. But going into next year, it's going to be about what happens with that retail market. Can we get some strength back into that retail market? That'll trickle over into the cash side, prove those packer margins, and that should just help out that hard market overall, especially as long as supplies look tighter in terms of the true livestock picture.
How about in that cattle trade? I know live cattle found a little bit of support on Monday. Feeders, even two feeders, as we went through the session, didn't like the higher corn prices, but still fairly mixed. As you look at the cattle side of this picture, though, what are your thoughts there? I know we still are thinking about, possibly consolidation heading into next year. But also on top of that, holiday demand fairly waning, it feels like. What's your thoughts on the beef side?
Well, Packer margins have turned into the red for the most part here with the softness in retails, a strong cash price. Last week we were steady, maybe a tick lower on some of these cash trades. Maybe we get a little strength early in the week here too today, just because of the storm coming through the Central Plains and cattle country. It looks like it's got some difficult weather conditions that could slow cattle movement down, so Packers just may have to bid up to meet their demands. Again, demand still looks pretty good in terms of moving moving beef products out. Retail values still have some decent price levels to them, but again, like I said, those margins have tightened. I still like the cattle market going forward. We're in a window. We do typically see some strength. The charts look good, even on some weakness like we kind of saw early in the week last week. We just went to the bottom of the range, and we're still tracking the overall path higher in both livestock, or both live cattle and feeder cattle. So again, still friendly to this market going forward. My only concern probably is going to be what happens with some of the other meats. Cattle supplies are tight. Beef supplies are going to tighten up as we go into 2023. That's well documented. But if we have a large amount of pork or chicken is still available to the market, that could still be just a limiting factor. The dollar's a little bit tighter out there for the consumer. They may move themselves to those cheaper proteins if need be. So that could still be something that's a bit of a lid on this market. Still like it longer term. Still think we're well supported in here. But again, just don't forget about protecting value, especially if you got cattle going out into those spring and summer months, given some of the prices that we have on the board.
Well, and the WASDE report on Friday also kind of reemphasized that thought of lower beef production as well. So no surprises on Friday's report either when it came to the cattle side, John.
Very much so. And again, it's a well-documented point that we're going to be tighter in supplies. We'll see the December cattle on feed numbers coming up here as well. Again, we're going to continue to see placements as well as just total cattle on feed being down 2-3% from the previous year. So again, that's just going to show us a tighter picture. One part I'm still watching very closely too is there's a high percentage of heifers that are in the feedlots right now that are not going into the breeding stock. When those heifers start going back into breeding stock, that's even going to tighten up that feedlot supply even more so. That really could be a factor in the second half of 2023. So that'd be something to watch. If we start seeing that heifer percentage come down, that means maybe we're getting finally some cattle expansion in terms of the breeding stock. That's just going to pull more animals out of an already tight supply picture going forward.
John, how about that dairy market to start the week? I saw some red on the screen there. What's the latest?
Dairy market continues to struggle a little bit. Some of it's seasonality in terms of the retail side. Again, today we're going down, probably checking the most recent lows, looking at that January contract. We got lows down around that 1860, 1870 area. It feels like it's kind of our landing zone, so we'll need to hold that. Cheese prices have softened here at the end of the year. And again, it just feels like the retailers through the holiday demand, even though export side is still very, very strong in this window, that domestic market needs to be there. And retailers aren't taking on extra inventory. I think that's some of the impact also going on in the meat section as well. It's just they just don't want that extra inventory to be counted at the end of the year. Therefore, we're seeing prices slide. So again, hopefully milk market can find some footing, but it feels like it's on a bit of a slippery slope here, especially if demand can stay shaky in the early part of 23.
John, I should ask you before we wrap up, Federal Reserve meeting this week. We'll be waiting for the updated policy announcement Wednesday. Are you, it seems widely anticipated we'll get a 50 basis point rate hike. Are you worried about anything with that Fed meeting and how it could impact the markets? Feels like it's kind of a backdrop to the commodities here this week.
I would say it is. That's going to be probably a big focus, obviously, of the equity markets as we get closer. Equity charts do not look very good in terms of how we closed last week, the move off the highs. Now we're consolidating here in the Dow market just underneath some real good resistance over top. So that Fed meeting could be pretty key. They said, I think today felt like some squaring up going into that meeting. We'll just have to watch the wording, not so much what they do, but what's their forecast going to be going forward.
John, thanks so much as always for the time. Before I let you go here, any final thoughts for us real quick?
Again, just stay active. Don't fall asleep, even though it's a holiday season. Markets stay volatile here. Trade starts thinning out as we get closer and closer to that Christmas window. I think a lot of it too right now, money's just maybe moving itself to the sidelines, going to position itself for the start of the year. Last year, we saw a pretty good pop on the first trading day of January. Wouldn't be surprised to see some type of movement one way or another again this year off that first trading day of January, as they're wrapping up the books for the year in terms of like the outside money, the fund flows, and then we'll just see what their focus and their plan is when we get into 2023.
John, if folks want to work with you, talk to you about the marketing plan there at Total Farm Marketing, what's the best way to reach you?
Love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Or again, don't forget about that website of ours, totalfarmmarketing.com. A lot of great information from producers out there. This is a good time of year. You're starting to settle things up for the end of the year. If you need to get some advice on some things, feel free to pick up the phone and give us a call. It doesn't cost anything to just ask questions.
Well, we appreciate the time and the insight with that. John Heinberg, Total Farm Marketing, thanks for the time, and we will talk to you again next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.